Welcome to Markets Now. I'm Michelle Rourke with Shawn Hackett, Hackett Financial Advisors, and an update on the grains on Monday. And Shawn, let's talk a little bit about this. Is this a dead cat bounce, or are we actually changing trend at all?
It feels like a dead cat bounce. It's not unusual at the beginning of a new month to get some reversion, some capital coming in, some short covering at the beginning of a month. You know, I really am skeptical of these bounces or rallies that we're seeing unless we can get a weekly, not a daily, but a weekly close over 450 July corn, over $12 July soybeans, and over $6 SRW wheat. I think until we get that technical confirmation, these bounces are going to be met by farmers selling who are trying to catch up with sales that they missed making when the getting was better last year.
It does seem, though, like we've gotten to a level where we are finding some value, though, at least.
Absolutely. There's no question at this level, under most scenarios, the economics of an ethanol plant buying corn, of a livestock producer buying corn are very, very good. And I believe we're starting to see clear evidence that hand-to-mouth buying is starting to get more aggressive, starting to get further length, and looking for larger quantities. And that's how you stabilize the market. But that doesn't mean the market has to rally. It just means it stops falling. So the first thing you have to do when a market is going down, it has to stop falling and find an equilibrium. I think we might be finding that two-sided equilibrium trade, but it doesn't mean that the market has to rally at this moment in time. I think it's going to take more of that churning action before we might be able to get some upside as we get further into the growing season.
News reports that have circulated that China's out buying, that they bought, corn, soybeans, wheat, maybe even sorghum. Obviously, we saw a little business to the U.S. that they're trying to fill their reserves. That's giving some hope that we are going to see some sort of price action or some buying to help out. Do you think that's going to happen?
Well, I mean, look, China's going to buy throughout the year. That's not the question. Are they going to buy? But are they going to buy at levels that we've been accustomed to in the last couple of years that is needed to alleviate some of this oversupply fear? I think that they will, but, they've been very, very dovish here the last 60 days and not buying as much as we would like them to buy. And what I'm watching, the indicator I'm watching is there's, corn futures trade in China, soybean meal futures trade in China. I'm wanting to see those prices breaking out to the upside, saying that the domestic supply-demand equation is getting out of balance. If I see that starting to move higher, I'm going to gain a lot more confidence that they're going to be needing to reach out overseas on a much more regular basis. So far, we have not seen that yet.
I was just going to say that. I've been watching those prices too, and they're going down, not up, right?
Down flat, but not showing any signs that we're seeing any imbalance going on in China. So long as that's the case, then why do they need to be pushing the panic button and buying foreign supplies if their domestic supplies seem so far to be matching what is needed? I think that's really the key metric to watch. Until that happens, I think any buying that we're seeing, like we saw today, is fine, but I don't think it's going to move the dial enough.
Mm-hmm. So a lot of the farmers have been pinning their hopes on either China demand or South America's crop being revised lower. What's the likelihood of South America's crop coming down, especially as we go into CONAB and WASDE numbers this week?
I think the odds are good that we'll see production come down further, but the amounts that they would probably come down, Michelle, isn't going to override the worry over a lack of Chinese demand, meaning that without Chinese demand buying at levels that we've been accustomed to, these reductions in the crop, which, I mean, certainly there's something negative about that, but they're not going to be enough to change the narrative of the marketplace. I think we need to see China's demand picking up, and then the smaller crop in Brazil can become more of a factor.
Mm-hmm. The wheat market has been really tanking here. We saw new contract lows in May, Chicago again here today because we've been following European or Paris milling wheat futures prices. Is that going to continue to be an anchor on that market?
Absolutely. I mean, we just really can't rally for any extended period of time without totally cutting ourselves out of any export business at all. Ukraine and Russia are just hitting the bid, low offering the market, selling everything they can, and it's just until that stops, until something changes that behavior, you're going to need a significant crop weather problem, whether it's a winter kill event, whether it's dry weather or during the springtime. But something needs to change that behavior. Until then, what we're going to see, what we've been seeing, any rallies are short and sweet to the point, and then we move down back to the retest or even go to new lows. I just don't see how we can rally while those prices remain ample and low.
And unfortunately, that's going to keep a lid on corn and beans to some degree, isn't it?
Undoubtedly, the speculators that are in the wheat market are also in the corn market and are also in the soybean market. So if they're feeling comfortable that their shorts on wheat look good, they're certainly going to stay, feel like their shorts in the total grain complex look good. And obviously, we know that, especially with corn and wheat, there is a symbiotic relationship that, one tends to help the other. And it's just not supportive at a time that we're looking for something to help, get us out of the hole here.
Now, the fund position, as long as you brought that up, we saw a little trimming of the short position on corn last week on the Commitment of Traders report, but funds went even longer in soybeans. They're still very short, or they went even shorter, I should say, in the soybeans, and they're still short in wheat. Do they want to be this short going into our growing season, do you think?
I don't think they ultimately do. I think at some point they're going to get weak in the knees and they're going to start, taking some of that coverage off. I mean, anyone that knows anything knows we almost always get, at least for a little while, some kind of a weather scare. I mean, look at last year. I mean, we traded the market over $6 for a couple of weeks before the market determined that the weather problem wasn't going to be significant enough. But do they want to be that short this early with all that going on, as well as overseas? I don't think so. I think it's a game of chicken. Everyone's looking around, and as long as everyone is playing the game, everything's fine. But someone at some point is going to pull the trigger, and that's when you start putting weather premium back into the marketplace as you move into the spring, which is normally what's supposed to happen.
Yeah. I want to ask you about cotton as well. We've had this big run. Old crop prices got over $1. New crop is, up today nearing almost 85 cents. Do you think that we are going to be able to steal a few acres here with these prices?
Answer is yes. I mean, the new crop price is a profitable price for the farmer. Obviously, the old crop price is a profitable price for the U.S. farmer. What I really like about cotton is it's the pathway I'm looking for corn and soybeans, meaning that the cotton price in China started to take off about 2 months ago. And then all of a sudden, these large exports or imports going into China started coming in for U.S. cotton. And then the ending stocks that we have started to look very, very small. And then we got short covering, and all of a sudden we had a move from as low as 75 cents up to almost touching $1 a pound last week before selling off, and we set off this kind of a short squeeze. That's the kind of pattern I would be looking for as signs for setting up a different narrative on corn and soybeans going into the spring, is that sequence of events which happened there. Now, having said that, $1 a pound, I don't believe China or anyone else is going to chase $1 a pound cotton at this point. I think they're going to back away, and I think that's going to be a pretty good watermark for U.S. producers who have old crops still left to sell to make sales. I think this is a good place to a lot of U.S. producers don't have an option of bringing money more home on the farm. Cotton producers have that opportunity. I definitely would take advantage of this fortunate rally. Definitely a good sign or a good news if you're a U.S. cotton producer.
Yeah, and we were down today. Most likely that was farmers selling, and hopefully producers did get to cash in a little bit of that profit. Okay, the cattle market had a pretty good pullback here today after a little higher week in live cattle futures last week. But is this kind of just part of some routine profit taking, or is this outside market jitters, or what?
I mean, if you really think about when did the cattle market really take off, it's when we had that polar vortex in the first half of January.
It was weather related.
Yeah, I mean, the weights crashed, the animals weren't available, the beef cutout price took off, all the packers got spooked, and we had this big surge, and all the funds that were short started to buy, cascade of events. Now we have extremely warm weather. We have very cheap feed. We have high beef cutout prices still. And we're going to be adding those weights right back on. And there's a lot of animals on feed to come through. I just don't see us being able to make a whole lot of headway beyond what we already have and what we saw in the fall of last year. I think this is another place, like we said last fall, for cattle producers to lock in a good cash price for the spring season. I know demand's supposed to go up. I know seasonally it's a better time, but I don't believe $3 beef cutout is going to be a sustainable level where the consumer is still worried about all this inflation that they've been having to eat, and they're still looking at all the uncertainty about U.S. elections and still a lot of mixed signals about the U.S. economy.
Thanks for joining us. Shawn Hackett with Hackett Financial Advisors and Markets Now.